The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman. This is the Tiger Technicians Hour. This is the Friday edition, and this is the day that Nico and Paige come on at 12 o'clock yesterday. Suddenly, for a moment there, I thought it was Friday. And, of course, it was Thursday, and today is Friday. Usually, it follows Thursday. And thanks for a great 2 hours, everyone, here at TFNN. Once again, I just want to thank everyone for making it so easy to do our stuff on our side of the microphone. The team at TFNN are fabulous. I did the webinar the other night. All I had to do was show up. I had to be here on time. I had to get all my screens ready, give my presentation, sign off, case closed. Heard from Mike this morning. He's hoping to have today for my subscribers to have, and anyone who's getting the trial subscription, the 2-week trial subscription, you'll be able to sign up and get the webinar to review if you didn't have a chance to see it or you want to see it again. A lot of information in that 1 hour. So welcome. Great shows all the way through the day. Nico DeHaan and Paige on health. Coming up noon, 1 o'clock, you've got Daryl Martin. Don't have to tell you about Daryl. He's already been on this morning once, just a fabulous technician. You've got another great technician. You've got Dave White with his power vector indicators, just an original concept, a beautiful way of making things as simple as possible to get the bigger picture. Let's see, so that's Dave. And then, of course, you get Ken Shreve, the expert in investors, business, daily tech, technical trading, plus his own techniques, of course. And then Tom O'Brien wraps it up 4 o'clock till 6. What a great show, starting off with Steve Rhodes early in the morning, talking about all these different candlesticks. And he's got Steve's candle. He's got just a wealth of information there. And I believe he's got a webinar coming up very soon. So we are a full-service site right here. The Dow is at a full-service site right at this moment. It's at 21, up 21 at 13,995. Testing that 14,000 millennium level. I'll go through the you know what? I'll do it right now. It's a Friday. It's the end of the week. We've got a 3-day weekend. Let's just take our time. We'll go through things separately, one at a time. INDU. Now, I have a technique that I use. Just one of a plethora. I haven't even added up all the different techniques. It's just I have my Sears and Roebuck. This is not Sears Holdings. This is the old Sears and Roebuck toolbox. I got everything there, plus the modern equipment, the stuff that I've been working on for years, and even the last 6 months, there's a whole bunch of new techniques that I've been working on. So the one easy one is this maroon line, that 9-period exponential moving average. You see it holding. The price is holding that 9 EMA. It hasn't closed under it since it broke above January the 1st, 2nd. Is that not an incredible indicator right there? Look at the MACD pulling back. I had a question the other day during my webinar. What happens if the MACD is pulling back but the stochastic is holding quite well? Well, it was in the Dow Diamonds, I believe, better than Dow Diamonds is still above 80% in the stochastic. What I say is that price is the determinant. Price is what you look at. It is the most important thing. Price gives you a sense of the structure of the patterns we're looking at. Because underneath, if you do an X-ray of the patient, which is what I love to do, I actually call it the EKG, because we're going, MRI actually, we're going really deep into the technicals. But you can make it as easy as you want. And the easy thing is, say, the price is the arbiter of trend. And at this particular point, it is just stuck in the middle right here, holding the 9-period moving average. And you know how I talk about the balloon? That balloon holds up as long as there's warm air, or as long as there's a wind. The moment the wind dissipates, there could be just a short period of time where the balloon doesn't even know it, and it kind of holds up there. But then it's going to pull back. But if in the moment it starts pulling back, the technical starts to turn up again, what you want to see is there enough strength to make new recovery highs for the balloon? In this case, the balloon is a Dow. Is it able to get above 140.36 in the diamonds, or in the Dow itself, INDU? Is it able to get over the 14,038? Is it? Let me just double check. Yeah, I think it was 14,038 back on the 12th of February. Well, we'll see. What if the technicals fail even further? There's no question that the Dow low of yesterday, that was 13,921, will be tested. If that's the case, it'll drag down. By the end of the day, options expiration, who the heck knows what's going to happen, because it's one of those days. Now, I always like to talk, when people say they've moved the market, actually, I see it a little differently. I've spoken about this for years and years. When it comes to, say, let's call it options expiration, all those very big days, up 250, down 250, it isn't they. What happens is, this is my summation, and I believe I'm correct. I don't know how I'm ever going to prove it, but I believe I'm correct, is that they don't actually always know where things are going, but they are very quick to identify, and then in concert together they give that little extra nudge. The GLD, I mean, how many, for months, it could even be a year now, I've been talking about the 158s is absolutely important, that the moment the 158 level is taken out on the GLD, whoosh, we're going to go down. Let me just check. Yeah, whoosh, down at 155.49. It just went right through like a hot knife through butter. Shush. And that's the nudge I'm talking about. Early this morning, did they know that it could happen? No, but once it happened, they just, in concert, they don't even have to, it's like, I always talk about it as if when I used to conduct my chamber winds or the orchestra, you don't go to each person and say, I'm about to go faster, they don't even have to look at you. Most musicians don't even look at the conductor. You just have to move your hand a little quicker. And they know instinctively, well, it isn't instinctively, they know through experience that you're now going faster. There's no big placard that says, I'm now going faster. It goes quicker. And that's exactly the same thing in the market. The market is a series of nudges. And sometimes it's a big nudge, it's a real push. And sometimes it's like now, because the market's holding up, all you need is the Dow to go from plus 19 to a sudden plus 32, plus 35. And you'll see that there'll be a plethora of buys that push the different indices up at the same time. And then, boom, it might hit a wall. And then they all stop together. Or it just keeps going. So that's the way we look at it. So here we are, holding the 9-period moving average. So what are the parameters? The Dow, near term, 13,900. Break that, and we'll be going down. Where we'll go down to the low, 13,852. That was the low of the 7th of February. My target on any pullback, more serious target over the coming week or two, and the way I'm looking at it now, we're getting real close to at least a digestive phase. If not a major sell signal or a sell mode, at least a digestive phase. And that says to me the 13,700 to 13,550 area, that's 400 and something points. That's a pretty big pullback. And then we'll have to judge to see bonds. You remember the three bears I keep talking about, VIXY, Bondi, and Dolly? If they are able to, you have to have the VIX. You can't just have bonds. You can't just have the dollar. You need them in concert. You need to be going whoosh to the upside together. If the volatility index gets into the 15s, this market is pulling back. Gets into the 16s, it stays in the pullback mode, waiting to see if it tests the breakdown of that January the 2nd, I think it was. Huge gap down from the 17s. So I've made it real easy for my subscribers. That's what we're looking at. Now, it's ironic that we have 6 long positions. One I'm watching real closely because we might just be taking profits today if it starts to pull back a tad more. It'll be giving us great gains, not as great as it was, but I was looking at the weekly chart as perhaps holding up way better. But so far, these things are acting really nicely. I gave a warning to one stock that it happens once in a while. I write down in my Trader's Corner, I think this is number 8 or 9 on the list of 17 bullet points. I said, if this stock, which we bought just 2 days ago, which is holding okay, it was just down 2 cents or something from where we bought it. I said, if it's not going to move real quickly, I'm moving it out and I'm going into another stock. And I named the name right in the line. And I said, I wonder if it'll see this. Well, it's up. It is up right now. This is funny. Well, the day's young, but it is up 6.78%. I love that. I always warn these stocks as if they can hear. They don't even care. All right. So that's the Dow. Now, the upside. If the Dow is able to break above 14,038, I don't actually see that much to the upside, but that starts at the alternate wave count. And all of a sudden, what we've got is we've got now, instead of the diamond's going to a D, the Dow itself is going to a G/C. So it's going to get a little complicated in the lettering, but the chart pattern is still unfolding pretty well. So let's go to the S&P. SPX.X and what happened? Yes, SPS.X is in leg C. I must make it a little bit smaller because I've got the notation. So this is A. Let me just get this right. I did something wrong. Oh, man. So that's the low. This has to be A. Okay, there we go. So this is A, and that could be B. So this is what's happening. You see the 9-period exponential moving average? The MACD is at 89%, and the MACD is still, the stochastic's at 89%. On-balance volume is rising. The MACD is pulling back. Now, people have asked me what I mentioned. I've always had it there. I don't want to get too involved with it. It's an indicator that I always put on because I have someone that a close friend who for decades has used the RSI, and he always talks about it, and I always tell him what I find is a problem with the RSI and what he loves about the RSI. So I've tried to compromise. So I've put it on. I don't really use it that much. I prefer, for my work at least, I prefer the on-balance volume. And you see the on-balance volume is still rising while the RSI, which is right down there, is kind of flattening out. The RSI really gave some kind of a sell signal at the peak D. But if you use that, then it hasn't gone much higher, but it's not giving you that kind of an accuracy that I like, but the on-balance volume seems to be, the stochastic has turned down, yet the price has gone higher. So the high on the 13th, on the S&P was 1524.69, and the high today is 1524.24. We have not yet broken to a higher high. So it's still walking the 9-period moving average, which right now is at 1516.50. And if it breaks and closes underneath 1516, I would say, okay, now you got to be careful. The level to look at on the downside is 14.98. That was the low of the 7th of February. That's quite a way. It's unlike the Dow, which has a slightly lower low, and then you get the bigger dip. This one doesn't. Now, the break coming up. Comp index is up 3. Gold is huge, down -30. Remember, I spoke about that. Silver's down 53 cents. Platinum's down 37. Copper's down 70 cents. Crude oil is down almost 2. And bonds are down 16. Bonds are down 16. I'll be right back. 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I'm Basil Chapman, Tiger Technicians Hour. I was also about Facebook. Let me do Facebook and get that done, and then I'm going to come right back here. I want to finish up these charts. I want to look at the euro. I want to look at the EUR, USD, all that stuff, USD, JPY. Let me just get rid of this here for 1 second. A little notice popped up here on one of my screens. Okay. Facebook. FB is the symbol. It's trading at 28.27. It's down 23 cents. From the IPO, where it spiraled up to the 45 round number high, not all of those round numbers, 45 are in high, put it in red, social media company. It plummeted down to 17.55. It ran up just recently. It ran back up and it went to the 32.51 area. And that was in the weekly. It made a left side, right side price time move. Look at that beautiful time move there. You've got to pick the right candle. And then it goes right to the week. Exactly. The week of the 1st of February. Makes a peak E. Just under the 33.45 high, went to 32, it's 32.51 it went to. Now it's pulling back. The MACD is still good, and the stochastic is at 80%. It's just holding. On-balance volume is plummeting. However, the daily chart is saying, okay, what's going on? And I've done this a number of times. But, A, B, C, D, E. I wondered why on earth it would fail like that. All right, here we go. Thank you for asking me to do this because I just looked at this over and over, and I said, something is wrong with this wave count in the Chapman wave. Here it is. This is the one that I'm going to go with. It is, because that for a peak, there we go. So there we go. So it's A, B. There we are. C. Never have silence when you're on a show. There you are. So it made a peak E from the low bar of... Darn, I'm really messing up here today. What's going on with me? There. From the low bar, so it gaps up, news that was some kind of news event on the 24th of October of 2012, gaps up to 24.25, pulls back to 18.87 on the 12th of November, and then it starts climbing. It goes peak A, peak B, then it goes sideways, holds the 200-period moving average, which has just gone above. You remember, once you go above the 200-period moving average after having not been there for a while, you're trying to get over it, but then you usually have to come back and test. It might even go a bit lower, and then it becomes a magnet line. Instead, it becomes a magnet line and then a propellant line, because on the 28th of December at 25.15, spirals up C and D, makes a cup formation, goes to an E at 32.51 on the 28th of January. I'm very comfortable with this notation. Then it pulls back and it goes trough A, trough B. Those are those little V-shaped bottoms, lower bottoms, and trough D. And now it's trying to rally. I'm going to call this gray A. Why is it gray? Because it's underneath the previous high, and it has to prove itself technically before I can be sure enough to make it the blue color that I use for the ascending letters, which are capitals. Descending letters are lowercase. MACD is just trying to flatten out, and the stochastics rallying, but the price movement hasn't been as strong as it should be with this kind of action. So here's my analysis. I know there are rumors of different people buying, very big fund managers. Something I think I saw SAC Cohen, what's his name? Stevie Cohen is adding to the position. I believe I saw that. But I'm looking at this, and even if it makes the handle to the cup and handle formation by going over 32.51, it's at 28.26. I think there's more work to be done. So I haven't yet got a signal to say that I, for my subscribers, want to actually buy this. I might have to buy strength, but I don't want to buy weakness. And at this particular point, I'm still looking at weakness. So what is the answer? The question is, what do I think of it? I would wait. I'd wait for a test of the candle, the doji candle of the 28th, week of the 28th of December, with a high of 27.18. and a low of 25.15. And the 200-period exponential moving average of 26.54. How it can handle that over the next week is going to be very important. Almost everything I'm looking at says too many stocks and indexes have made leg D. Even if they're recycling, they're real close to getting just one more leg up to get that pullback. Right now, I'm comfortable saying that we have our 6 longs. I'm almost sure one of them is going to be taken out today to free up a little bit of cash, and we've got one. We've short one of the indexes. Is that okay? We're just a tad underwater right now. I don't really mind. This is more insurance, but I suspect next week we'll be adding to the short positions. Basil Chapman, 877-927-6648, and we'll get back to those indexes, etc. straight after the break.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians out. Dow's up 5, S&P's down 7 cents. Let me just continue the analysis. The Qs. This is the QQQ Trust. Now, the week's not finished, so I can't talk about the weekly chart as if it's closed. But I've got an alternate count in the Qs. But look at the pattern. It's formed the leg, the body, the neck. It's making the head. And all you need to see is 2 things. Either if the Qs go above 68.23, that'll be very positive. At least it's sustaining the up move. Not very big, but it's sustaining the up move. Or if it takes out... The low of yesterday was 67.62. It's trading at 67.96. If the Qs, the QQQ Trust Series, closes underneath 67.50, that's the number that I'd be looking at, because if it closes underneath there, then there's a chance that that wick, that very skinny little wick from the 7th of February, with a low of 66.56, somewhere in there, we will be looking at the Qs sliding towards that level. I would say, yeah, a lot depends on Apple, but I'm not sure it's just Apple right now. There are a lot of other stocks that are starting to find some kind of weakness. There are some stocks that have the strength. That's the fight you got on right to this particular point. My guess is that we're looking at the Qs right now. Oh, this is what I want to... Well, I showed subscribers this morning. You see this chart? Look, whoops. look at this long-term chart of the Qs. 120.50 was the high back in March of 2000. It just became an IPO in March of 1999. A year later, it makes its major top, goes from 120.50 down to 19.76, rallies to about 55 in October 2007, so 2002 it makes a low, 2007, 5 years later, makes a high, pulls back, makes a low of 25.05. Let me just type that in there, 25.05, 25.05. As I'm migrating from the black background to the white, I've got to fill in a lot of information. And now it's got a rising wedge pattern. So let me get this. There you go. See the rising wedge pattern? You see that beautiful, major long-term trend line? And then that technique that I use in my CD introducing the ChapmanWave methodology I talk about is called the inside track. It's where price is very often repelled. That's where I call it the sell zone or the repellent zone. But it went up there to 70.58 peak G/B. And we're waiting to see, is it going to make a new recovery high or not? But in the meantime, it's making rising lows, and it's got an inside track support line. And we're coming to the apex right here. The apex, in fact, would be close to, I'd say April, May, June this year. It's beginning narrower and narrower towards the point of the two wedge trend lines meeting. The stochastic is at 74%. That's not great. The on-balance volume is good. The MACD is negative, but the beta between the fast-moving average and slow-moving average is really quite narrow. And the 9-period exponential moving average is still tremendous support at 65.88. So in the meantime, it's in the uptrend, and it won't change that uptrend until it breaks either the 9-period moving average or the support of about 64.50, and then it's going to test the bottom of the candle of November of last year, 61.31. It probably could, I should say. So all it needs to do is maintain this steady creep to the upside, and that'll be good, except for one little thing. The weekly is in leg D with a doji. At the end of the day, there's no question there'll be some kind of a doji formed here. The last doji was the peak E doji at 70.58 in September of last year, and then it plummeted from 70 down to the 61.31 level. Type that in, 61.31. So I'm watching this really closely. I'm saying, hey, a lot of stocks have had a fantastic move. Now I'm starting to see more and more stocks, not necessarily NASDAQ stocks, but stocks that have done fabulously, starting to fail. And I suspect that we're looking at a situation here where the most critical level on a very short-term basis is to say, if the Qs close under 67.62, the trend probably will be towards the downside next week. If for some reason at the end of the day, I don't know if it's going to happen, the Qs are able to break today or Tuesday above 68.23, all of a sudden you're looking at something different. But this doji candle, I will be showing subscribers some of the techniques I love to use, and we'll talk about the Qs, this doji candle, what you can expect if certain things happen over the next 2 to 3 weeks. So that's the Qs. But now look at this. We've got, just real quickly, I'm going to go to the TLT. The TLT, lousy candle today, lousy candle in the monthly chart so far. This is the Lehman 20-year T-bond fund, but it is trying, at least it's becoming apparent, that it's making an attempt to make the low of 115.51 on the 1st of February the low that's important, because like the GLD, if this really plunges through 115, goes to 114.30, it's just a real quick ride down to the 111s. That means by next week, Thursday or so, Wednesday afternoon, Thursday, the TLT has to be breaking above 117.04, the high of yesterday, but that's really not good enough. It has to take out 117.59, the high of the 7th of February, to 117.85, the high of the 1st of February. If it can close above that, all of a sudden the gap in the 118.60 area becomes a target to the upside. That's that. Now, just one thing, and then we're going to go to calls, VIX.X. Just let me go through this again. Lousy action today, down 39 cents. It is breaking the left side low of 12.30. The low today so far is 12.24. For there to be a sustained, I don't mean just a pop-up, but a sustained move, a lot of work in that volatility index needs to be done, and you need to see that volatility index, first of all, break the high of yesterday, which was 1332, so a point, just over a point higher, and then by Thursday or Friday of next week, get into the candle of the 7th, between 1343 and 1441. That's the way I would look at it. Just real quickly, EUR USD, and you're making a doji candle in the daily after a peak D top and a peak D top in the weekly, so it's absolutely imperative that that holds 1.32 over the next few days. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good. How you doing? Two
Very
things.
well, thank you.
In today's opening call, you had the SPY at a C. I get an F.
Okay. Hold on.
What?
Let me just do this. Yeah, I got the SPY. This is in the daily?
Yeah.
Okay. 151.42 was the high on the 1st of February. So it's a lower high, 151.48. Oh, 151.42 for...
Counting from the low of 12.
Okay. Just a minute. So that's A. No, that's right. So this is A, B, C, or it's E, F, G. Now, I don't see where I went wrong, if I went wrong. Oh. No, that's...
Counting from 1231.
Okay, from 1231, we get peak A on the 4th of February at 146.61. You get B at 147.09 on the 10th of January. And then you get nothing, 25.33, 150.85, 150.94, 150.38. So there we go, 150. So C becomes the 30th of January, correct? And D is 151.42 on the 1st of February. That should be the same as yours. Is that the same as yours?
No, not quite, but it's okay.
So tell me, after B, where do you get your C?
This is what I get. On the 4th of January, I get an A.
Right.
Okay?
Yep.
Then on the 11th of January, I get a peak B at 147.15.
Correct.
Then 148.42.
So you
I get a C
on the 30th.
30th of January.
30th, right?
150.94.
Correct.
And I get a D on the 1st of February.
Absolutely.
42. An E on the 5th of February.
All right, let me just type that in here because that's an E/A for now. E/A because...
Yeah, okay, and then I don't get a 151.89. Then I get an F on 12/13.
Oh, you're right. You're absolutely right.
And
so it's F/B.
High today, so I get an F. I don't know where. We didn't go over today. We didn't...
No, we haven't gone over today. That's what I was talking about. Okay, absolutely. Yes, you're correct. I'd written that in. In fact, I don't know why I didn't do that because I've got it in my daily chart. That's exactly what I got.
And we're going down right now, so it makes sense.
Okay, so let's just do this. So we're looking at the SPY, folks, and the SPY right now has got an alternative wave count, but it is an F/B. Normally what you would get at a peak F is that the technicals will start to deteriorate, especially the slow stochastic, which actually right now is still at 89%, number one. Number two, within 2 sessions, and today's the second session after the high bar of the 13th of February, today is the bar. We'll see. The day's young. Anything can happen. This is the bar that should close, or at least intraday, it should go below yesterday's candle. So that would be below 151.52, because that's normally what happens at a peak F. This is where you get the strongest move, and it happens within 2 to 3 days. Actually, yesterday's candle was a tip-off for me. That's why I've got the alternate count. Then I've got to be a little bit careful here because it was quite strong. And the Dow wasn't that strong, but the SPY was. So we'll see. The day's young. Options expiration, we could still get that turnaround. And if that turnaround occurs, then what I've got to watch out for is that my weekly is in leg B. It could be E/B. I'm calling it B now because the stochastics weight 99%. Wow, 99%. That tells me that any pullback in the daily that closes under 151.65 is the 9-period moving average. That closes under 151.40, 151.20 says now you're in a short-term sell signal in the daily. And if the stochastic starts to break under 80%, that'll go to a sell mode. But it's still very strong at 89%. So, as I say, the day's young, and you're absolutely correct. You got an F/B in the SPY. And we just have to watch and see what happens. But so far, the weekly and the monthly are still very strong. But that's not what you wanted to talk about, right?
No, URI. You
okay.
had this as a while back. I don't know, like 2 weeks ago, 3 weeks ago.
Right. So URI, folks, is a rental company, United Rentals, the monthly chart. I don't know. I have to call this actually leg C. This is amazing how these charts are recycling so beautifully. In the monthly chart, I just have no choice right now. It's just I don't get G's in monthly. So this has to be a leg. It was an F/A, and now it's going to be A goes to B. So the monthly is in B. This is really very bullish for this particular company. The weekly is in leg C. Very technical. It's technically very strong, but it's getting to an overbought reading that says upside now is going to be very limited. Got to watch for it's a 55.60 URI is a symbol. It's down 33 cents. 50.02 in the weekly chart is the major support, and it hasn't broken the 9-period moving average since it broke above back on the week of 19th of October. And the daily now, I've got the daily. Let me squeeze it a little bit to make it. There. Oh, I haven't done any work on this at all. It was off my radar. So URI went to a D. That has to be an E. And now it's gone A, B, C in the daily. C in the daily. So it's still very strong. Stochastics at 93% and the MACD is very strong. So, are you doing anything?
I guess when it pulls back, I'm going to cover this.
You're short.
Yeah.
Oh.
At the monthly here, that's not good.
No, not good if you're short, right?
No.
Okay, here's what I'm going to say to you. Two things. Because of that candle, now normally you see the candle of, let me talk about this for a moment. URI, folks, United Rental. It had a candle back on the 24th of January. It opens at 49.19. It screams up to 51.50. It plummets down to 46.67. And then it closes as if it never woke up for the day at 49.16. Makes this long-legged doji candle. So I'm going to talk about that in a moment when we get back. And Mike is actually short, and I'll develop some kind of strategy which I think might help. I hope I can help you. We'll be back with Mike and Shiv.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, Tech Technicians are, and we are on with Mike in Long Island, and we are looking at URI, U-R-I. So, Mike, this is what I'm going to make a suggestion with as far as URI is concerned. This should be peak C. At the way it looks right now, if by Tuesday or Wednesday it doesn't take out 56.80. Actually, even if it takes out 56.18, unless the earnings or something that's coming up next week, I don't know. But I don't see much more than 56.50. So I tend to make a stop on some part of my position round about the 56. If you want, about 56.70 to 80 area. But the moment it starts to decline here, if it takes out 54.88, the low of yesterday, start on some part of your position, start lowering the buy stop. That's the best thing that I can do. Let's look at it again on Tuesday or Wednesday, but that's the best way, because it's really looking strong, as you can see right now. So I hope that helps you.
You know that you see that doji?
Yep.
Over there on, the E, peak E or whatever.
Yes, that wide-legged doji. You see, it retested it with the rule of my rule for the wide-legged doji is that the entry and exit points, the open and close, gets tested. It got tested the next day, and it almost got tested again on the 31st, and then it broke out. Once it breaks out above the peak of the long-legged doji, 5150, you got to be careful, because that's the trend. And then look what happened. The 9-period moving average, it didn't even come close to it. So that's what you want to see. You want to see it pull back very sharply from here, and then maybe there's going to be one more spike after that for D. and then it should start to pull back. But this is still a very strong stock. So
thank you very much.
I gotta run. Thank you. I hope you have a good weekend. Let's go to Shiv in Boston. Hi, Shiv. How are you?
Good. How are you, Basil?
Very well, thank you.
Yeah. So we're getting snow more again, I guess, huh?
I guess so, and hopefully I'm going to miss it. I'll be away for a couple of days.
Yeah,
We'll see.
I heard you going away.
Yes. You'd like to look at
Petrobras.
Petróleo Brasileiro SA. Do you have a position in this?
No, I'm looking like bottom fishing and looks like it's kind of close to all-time low.
You know, I'm going to suggest that you hold it for a little bit because the 200-period moving average on the monthly after made the peak F-top and then bounce has been broken, and now that's resistance. The weekly chart, yes, is a doji, and it might just be starting. Give it 2 days. It's worth at 2-year lows. I'd say to you, give it a little bit of a chance, and I'll tell you what, you could nibble at it here. If you put a stop under 1574, 1605, give it a 1-point stop if you wanted to nibble. You want to see this thing, PBR is trading at 1605. You want to see it clear 1630.31, and it needs to do that really quickly. Otherwise, it's just going sideways. So my advice is I personally would wait for a little bit more evidence, but you could actually do a little nibbling right here at 1606 with less than a point stop. You could make it at 1562. If it gets to 1562, that's really not good. But the reason is that the stochastic's flattening out, the MACD's flattening out, but I don't have a sign of strength yet. I would like to see the sign of strength. Then I'll say, okay, now it could turn up. So 1649 is the most important level. It needs to close above it 2 out of 3 sessions. And then it says, okay, maybe we've got some kind of at least a short-term bottom end. So I hope that helps you.
Yeah, excellent. Perfect.
Thank you.
Did you get a chance, Facebook, could you able to comment? I sold the cover called. Again,
on
the
Facebook?
Price of 32.
I just did Facebook. I'll tell you exactly what I wrote. I said it was for someone in the den. What did I say? I can't remember what I said. I'll do it for you right now. Okay, Facebook right now is trading at 28.24. I think it's going to retest the 27.10 level. That's going to be the test for me, whether or not it can hold. If it doesn't hold, 26.64 is the next level of support. I would hold off. Call me again Tuesday. Let's look at it together. We'll have more time, okay?
Okay, I will, Basil. Have a nice time in New York.
Thank you. Have a great long weekend, everybody. Thanks for being here. Stay tuned for Nico and Paige. Great show.